JFD, just fair and direct.
Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius and Anucauskas. Today is the 10th of March 2020. So yep, welcome everyone. Welcome to this Tuesday's afternoon session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so also just before we jump in, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course our JFD Bank website, and specifically our JFD research page, which we update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Now then, let's jump into the charts. Now the first one I want to touch on here is the FTSE 100. Now just a quick update on this. So I've looked at this one this morning, and basically the index continues to kind of balance here on the lower side, although we are seeing we saw a bit of a correction here to the upside, so everything's kind of coming out normal here. I mean, this is what I've talked about this morning. So the index managed to climb all the way here back to the 6,231 territory, roughly around there, from which it kind of started retracing back down. And in a way, what I was saying, that for us to consider maybe the upside again, at least some higher levels, we would like to see a push above the 6,460 zone first, because this way then more buyers could join in and potentially drive this one higher. Unfortunately, it didn't travel all the way there. It remained below the 6,231 zone, and we're seeing now a bit of a correction back down closer to that psychological 6,000 mark. So again, for now guys, looking at this picture, yes, the little recovery that we're seeing here right now, that's quite normal given the fact that we had a strong decent slide lower, but for now, the way we could play this one out right now is, of course, if we see a drop below the recent lows here around the 5,958 territory, then yes, we will aim for lower levels. Ideally, of course, we would prefer to see a drop below the 5,900 level, just to kind of get that lower low and a confirmation of a lower low, and then yes, we could aim for further declines. Again, don't get me wrong, that's the reason why we had this this idea here, where we could see a bit of a correction here, and then maybe a drop lower. So in a way, for now, this newly established level here at 6,230-31 zone could play out nicely. So if we see the price struggling to overcome that, then yes, we will aim for the downside again. In terms of the upside, I'll repeat myself, a push above the 6,460 level, that's what we're looking here for. S&P 500. Now the S&P 500, looking at this picture here, the market is already open. It is already pushing higher, so that, yep, that's good news here for the equity markets. The only thing is that, as you can see previously, I looked at this one. I mean, it kind of traveled all the way to these levels that I spoke about previously, with the lows of August 2019, and to be honest, it did continue drifting lower and kind of almost reached the lowest point of June 2019. As you can see, it kind of fell just shy of a few points from hitting that. So again, yes, this healthy correction right now is okay. We're keeping a close eye on it, but in a way, if it if it remains below this barrier here, the 2,856 zone, which is the lowest point of February, if this lowest point of February acts now as a good area of resistance, we could see another round of selling, potentially maybe even driving this one back towards the closer to the lowest point of June 2019. Now, in terms of the upside, again, it's very tricky to talk about the upside because, as you can see, overall we are trading below. Let me just load this one up here, below this upside support line taken from the lowest point of December 2018. So basically kind of the trend is changing now to the downside, but again, don't get me wrong, a bit of a maybe larger correction could be possible, but at this point in time, looking at this picture, maybe we could start considering some higher levels if we get a push above the low of the 6th of March here, basically the lowest point of last week. And let me just double check that. Yes, that's correct. So if we do get a push back above this 2,901 zone, then yes, we will aim for some higher levels, but don't get me wrong, still the price would be below its 200 EMA here on the daily chart. So excuse me, so in a way, still the downside pressure could prevail. So in a way, if we get a pushback above the 2,901 territory, then yes, we might consider some higher levels here up until this 200-day EMA. But if it continues to trade below this barrier here, this key area of previous support now, which could turn into resistance, this area right here, let me just quickly put this one on the chart, this 2,856 mark, if the price remains below this, then yep, we could see another round of selling, potentially dragging this one towards the lowest point of June 2019. WTI oil, very quickly on this. I've looked at this one on Monday in my morning video, and basically after it found some support near the 27.40 zone, it started recovering a little bit, of course, and today we've seen this one pushing higher. But also what I've mentioned in my yesterday's video, that in order for us to maybe consider a slightly larger correction to the upside here up until this downside line, of course, we would need to see a push above the 34.80 zone, somewhere around here. That's basically the high of the 29th of January 2016. Let me just double check that very good. 27th of January 2000, and is that 27th or 28th? There we go, that's 28th, guys, 28th of January 2016. There we go. So basically we need to see a nice good push above that in order to kind of consider a larger correction to the upside. But as I said previously, up until this downside line taken from the high of the 8th of January 2020. In terms of the downside, again, as I said previously, if this area holds, if this area provides good resistance, then we could see another round of selling, potentially dragging this one to the 27.40 zone, which is this week's current low, the current low of this week. Or we could see a drift towards the lowest point of February 2016, and that's roughly around the 26.08 level. So something to keep an eye on, guys. And for now, let me just quickly put some arrows here on our chart. Basically, the main scenario for now still remains this one, where if the 34.80 territory holds, we could see another round of selling. But if it gets broken and we see a daily close above this, then yep, we will aim for this downside line. NZDCHF, very quickly on this, so also managed to retrace somewhat. Let me just get rid of all the lines here. So it managed to move away from this low here, the yesterday's low, which was around the 0.5520 territory. Now you can see that the rate is balancing around the 0.5890 zone, so maybe just slightly below that, but around there still. So of course, don't get me wrong, we may get get a move back down here, but for now we're very cautious. It's really difficult to talk about these such pairs which have moved really strongly. So for now, what we're gonna look at here is keep an eye on this downside line taken from the high of the 27th of December, and in a way, if this pair pushes above this little barrier right here, the high of the 5th of March, then which is around the 0.6037 zone, then yes, we will aim for some upside. In a way, also, let me just actually jump into a 4-hour chart. Maybe we can find a better level. So looking at this picture here, you can see that the pair is coiling up right now on the 4-hour chart. In a way, it's getting into a little squeeze here. So from the probably shorter term perspective, how we could play this one out is if we keep an eye on this little level here around the 0.5916 mark. You can see that it acted as a good area of support here back on the 6th of March, and also as good resistance from the beginning of this week. If we get a push above the 0.5916 mark, then yes, there could be a possibility to kind of aim for the upside. We will then aim for this high that I spoke about, the 0.6037 zone. Let me just adjust this level as well. There we go. That's the 0.5486. So there we go. A much easier, a much more clear picture on the 4-hour chart. So basically, the lowest point of this week was around the 0.5486 mark. So from which the pair kind of drifted to the upside. For now, looking at this picture. Again, there is a good possibility we may see a move higher, but again, everything up until this downside line could be considered as a temporary correction before another leg of buying. So keep your eyes on this level here around the 0.5916. USDJPY. Now, I've spoke about this one this morning. Still, the same idea remains in play. We need to see a push above the 104.96 zone before we could consider maybe a slightly larger extension here to the upside, up until this downside resistance line taken from the high of the 20th of February. We need to see a break of this downside line and a push above the 106.82 zone before aiming for higher levels. GBPCAD. Now, very quickly on this, as you can see, we had a fantastic explosion here to the upside. Of course, that's understandable given because of the oil prices, and right now the pair seems to be like squeezing a little bit, I would say, and for now we're just keeping an eye on this one, this little island that has been created, as you can see on the 4-hour chart. So basically, well, we do have a cap here, but normally it shouldn't be, but nevertheless, we'll keep an eye on this area. What we're going to do here is we're going to keep an eye on the low here near the 1.77 zone. A drop below the 1.77 could in a way increase the pair's chances of drifting lower. We could then target the highest point of January near the 1.7481-82 zone, and then we would take it from there. But let's not forget that still, for now, the pair is on an uptrend. It's trading above this upside support line taken from the low of the 2nd of March, and in a way, any move lower here could still be seen as a temporary correction before another leg of buying. So that's why the 1.77 zone, that's a break after which we will consider some lower areas. In terms of the upside, it's very difficult to talk about the upside when you have such a huge move higher here, but nevertheless, just to be on the safe side, on the cautious side, preferably we would like to see a push above this barrier here, the 1.8058 zone, and then we will aim for higher levels. So for now, guys, keep your eyes on this one, keep your eyes on these two levels, and let's see how this is going to play out. EURAUD. EURAUD, looking at this picture here, and you can see that yes, overall we are still above this upside support line taken from the low of the 19th of February, but at the moment right now here you can see that yes, we did get a retracement after hitting this high, and let me just quickly mark that on our chart. So after hitting this area right here, near the 1.8207 zone, the pair drifted back down, kind of tested its 21 EMA here on the 4-hour chart. You can see it kind of acted as a good area of support and then rebounded and is now still trading above that EMA. In a way, there is a good chance for this one to drift higher, but what we're going to do here is we're going to keep an eye on this level right here around the 1.7417, and as you can see, it kind of has been playing kind of as a good area of resistance today. So a nice good pop above this could open the door towards this other intraday swing high of yesterday around the 1.7757 zone, and then yep, we will take it from there. In terms of the downside, ideally we would like to see a break of this upside support line, and only then, and of course a drop below the 1.6973 zone, which is the low intraday swing low of Friday, and then yep, we could consider further declines here. But again, for now, if it drifts lower, if it up until this upside line, still it could be seen as a temporary correction before another leg of buying. But if it gets a nice good push right now above the 1.7417 zone straight away, then yes, we will aim for these recent highs again. The first good level for us to consider could be around the 1.7757. And finally, euro dollar. Now it retraced a little bit lower today. I spoke about the 1.1355 zone today, and we did get a drop initially this morning below it, but as you can see, the level here continues to hold, and the rate traveled back above it and now continues to hold. So in a way, if we look at the daily chart very quickly, you can see that the daily candle is still above this barrier, above this area. So in a way, if it continues to act as a good area of support, we might see something as we had here on the 4th of March. And as you can see, we did get a retracement, but on the 4th of March, I was telling you guys to keep a close eye on this 1.1095 zone, because if it holds, we could see a nice push higher, and this is what we had, and we had a nice acceleration here to the upside. The only thing is, of course, don't get me wrong, we are quite overstretched here to the upside, even on the daily chart. So let's keep an eye on this 1.1355. If it holds, we could see then a nice push higher, but if it fails to do so, and if we see the rate staying below this area, then well, we could potentially consider maybe a deeper correction to the downside up until this upside support line taken from the low of the 21st of February. So something to keep an eye on for today, guys, as well. So yep, we'll continue observing some of these levels that I've mentioned, and let's see how this is going to play out. For now, yep, on this one, probably we'll take a bit of a neutral stand, or should I say maybe even cautiously bullish, I would say, because if this level here, the 1.1355 holds, then yep, we will aim for the upside. But if it fails to do so, there could be a deeper move to the downside. Okay, guys, I really hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me tomorrow morning, as always, at my Traders Espresso, as always, 7 o'clock GMT time. For now, I hope you have a beautiful evening, and I'll see you tomorrow. Thank you very much, and bye-bye.